The clamour for the removal of angel tax is ringing loud as the finance minister is set to present the newly constituted first union budget on the 23rd of July, the first budget of the third term of the Modi government. In fact, hopes are high as DPIIT Secretary Rajesh Kumar Singh has gone on record to say that the recommendation to repeal the angel tax has been made yet again, but the final call rests with the finance ministry. For the startup ecosystem, the angel tax has been a long-standing issue alongside the ask to bring parity in long-term capital gains tax on the sale of listed versus unlisted shares and the removal of double taxation of ESOPs. The sector is also urging the government to allow startups to list abroad and reduce the regulatory hurdles for those who want to reverse flip domicile to India. Now, nearly a month ago, the Indian Venture and Alternate Capital Association, that's IVCA, met with the finance minister for a pre-budget consultation, reiterating these demands, emphasizing the need to operationalize the recommendations of the expert committee on PEVC industry chaired by former SEBI chief M. Damodran. The IVCA also renewed its call to unlock domestic pools of capital and allow insurance and pension funds to seamlessly invest in alternate investment funds and startups. The call is timely as startup funding has hit a 5-year low with frontier technologies led by AI taking center stage. There is a collective push for mission mode urgency to boost skilling, R&D spending to drive innovation and domestic manufacturing. From frontier to interior, startups are seeking a big rural push in the union budget as their addressable base in urban India starts to saturate. So, from easier regulations to a thriving rural economy, let's hear what startups and investors want from Budget 2024. Hello and welcome to the Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shireen Bhan. Joining me now to deliberate on the startup economy's wish list for the budget, S. Srinivasan, the MD of Kotak Alternate Asset Managers and Vice Chairperson of IVCA, Alok Mittal, the co-founder and CEO of Indify, and Vikram Gupta, the founder and managing partner at IVCap Ventures. Gentlemen, appreciate you joining us here on the program. Alok, we were talking just before we started the show, and I said if I look at the list of recommendations that have come in from IVCA and for the startup ecosystem in general, I get a sense of deja vu because not much has really changed, has it, Alok? It's the same set of recommendations that have gone to the finance ministry year after year for the recent past, including, of course, the issue as far as angel tax is concerned. Alok.
Srini, first, thanks for having me on the show. Yes, some of these recommendations are nostalgic almost. Now, I think the angel tax recommendation has been out there for a long time. It's good to have the support of DPIIT on this, but I do hope that this one comes to fruition despite the best intents of the government. The piecemeal measures that we have taken so far in trying to address this issue haven't really worked, and nuisance continues to be caused on this account. At the same time, I think new issues have gotten created. Certainly the one on ESOP taxation is something that needs to be relooked at. I think we as a nation needs to realize the compounding effect of ESOP wealth. Today, we are seeing a lot of angel investments happen in the country, and many of these people are people who have made money in startups, either as employees or as founders. I think some of the new opportunities are also surfacing up, right? I think there is an opportunity to provide policy push to some areas of both strategic importance as well as the ones that lead to job creation. And I do hope that some of the fund-of-fund initiatives and allocations are directed through those sectors. So yeah, I think it's a mix of the old and the new.
It is a mix of the old and the new, and I'll get to the new in just a bit, but let's labor on the old, because as you pointed out, the DPIIT, and of course, not just this year, but for the past several years, has been pushing forward the recommendation to the finance ministry, but we haven't seen things change. In fact, if anything, in the 2023 budget, the budget actually expanded the ambit to include foreign investors as part of the angel tax regime. Now, I want to understand from you, Srini, what is the realistic expectation now as far as angel tax is concerned? And going back to the point that Alok was making, I mean, what is the pain that it's causing currently in the ecosystem? How much friction is it realistically causing in the ecosystem today?
Shireen, I think the expansion of foreign investors is obviously, because at this point in time, if you really look at private equity investments in the country, while you look at the big numbers that we talk about in terms of billions of dollars coming into private equity, the reality of it is that there are investments are happening through two different pooling mechanisms. One where foreign investors or domestic investors pool their capital under the Indian regulations as an AIF, and they invest in companies, whether it is an angel fund, category 1 fund, 2 fund, or 3 fund. And the other is foreign investors investing into startups. Many of them actually invest as an FDI or under the FPI regulation. Hardly any of them actually coming through the AIF regulation. Now, the change that you talked about is that while AIFs have been given some relief, a foreign investor, it is very hard for the government today to distinguish between an FDI investor and an FDI PE investor, so to speak, because there is no such classification under the present regulation. So it has got caught into any of these guys who come in as an FDI otherwise. So it's a very naughty problem in terms of trying to resolve who is the private equity investor, who's the foreign investor, and who is not who is the strategic direct investor, because both of them are coming in through the FDI regulation. And like you rightly said, the ask has been there consistently, and not just on angel tax, but a number of other things where the ask by the industry have been reasonably consistent over the last several years. Hopefully, we will get heard this time.
Srini and Alok, and before I, move further and talk about some of the other issues raised, I just want to address this angel tax issue one last time. And Srini, I'll start by asking you, and I'll get Vikram to comment on that as well. How much of the fall in funding would you say could be a factor of this angel tax business and the pain and friction on account of it? Because if we were to look at the dry powder that investors are sitting on, it's significant at this point in time. In 2023, fundraising halved to 4 billion versus 8 billion in 2022. Year to date in 2024, it's about 5.5 billion. How much would you say is the angel tax problem weighing on investor sentiment? Srini, I'll start with you.
I think Alok and Vikram would be better placed to answer that, but to answer to broadly put it in perspective, any valuation that has already been taken by an existing company, which has been published or which can be taken as an NAV by any other investor in any other format, and then if there is a down round by any chance in any of those companies, which is likely to happen in the current market conditions, that is going to pose very significant questions and problems, and it would definitely be a factor for new investors to consider when they are looking to negotiate additional rounds of capital. But I would imagine Alok and Vikram would be better placed to answer that in more detail, because they must be seeing it more often.
And that's a good point that you make. That's a good point that you make, Srini. Let me get Vikram into the conversation. Vikram, the same question to you. How much of the pain that we're currently seeing is also on account of the friction caused by the angel tax? How much is it weighing on investor sentiment and minds of investors today?
So first of all, thank you, Shireen, for having me on the show. And I think, as you rightly said in the beginning of the show, we are, looking at the same problems that we saw 5 years ago. And I think while we've been trying to push the system hard with, there are multiple other issues. Angel tax is only one of the issues that we are trying to address. And to answer your question on, what would be the potential impact, and I think I would look at it from a different perspective. So an investor would only have a defined pool of capital that they are willing to deploy, and if they find multiple options, and public markets have always been auction over time, and we're seeing how the public markets are growing, and we've seen a huge disparity even from a tax perspective. So obviously, if there is less friction, there's more liquidity, more options. I would prefer investing through public markets versus in the private markets. So I think not only we have not addressed issues like these over time, I think it's becoming more and more challenging. And from an impact perspective, I would say at least you would have noticed maybe 30 to 40% higher, and this is my own personal view, maybe 30 to 40% higher investments if this particular issue had been addressed earlier.
Well, that clearly seems to be the message that the startup ecosystem is sending out to the government. Let's see whether this time around we will see the government oblige and rectify some of the issues that have been raised. But Alok, I want to come back to you now and talk about some of the new issues that you spoke of. And of course, the ESOP tax issue is not a new one. That has, of course, been on the table for a while. But let's also address this business of direct listing and the reverse flipping tax, because that has again been something that industry has raised with the government. But the view of the government is interesting, and I'm quoting to you what the Commerce Minister Piyush Goyal has said in March of this year, and he says essentially that companies went outside for their own, and I'm quoting him, own selfishness, not because of any pressure or any other reason. They wanted to do better tax planning, they enjoyed that benefit. Why they want to come back is not an altruistic motive. They want to list in India because here's where you get the valuations. India's growth story is unparalleled in the world, and that's why they want to come here. So given this context, do you really expect any course correction on the issue, even as far as tax related to reverse flipping is concerned?
So Shireen, I agree with most of what the minister said, right? Startups are acting in interest of their shareholders. They are not doing this for altruistic reasons. Equally so, I think it is important that we allow our startups this choice of where they want to list. There are certain business models that are better appreciated in other parts of the world. There are business models that the Indian market rewards well. But that is not a choice that our dispensation should impose upon our. I think that is the limited point here. So sure, they went to other jurisdictions because there was a prospect of better outcomes in terms of either the ability to list or the valuation or the amount of capital they can raise, and hence continue to be globally competitive. And startups should have that choice to make. As a country, we gain when those choices get made. Our founders make more money, they pay more taxes here. They get more capital to be globally competitive, they create more jobs here. And similarly, if founders are finding a way to come back and list in Indian markets, I think that's a great testament to how Indian public markets and public market investors are maturing. And I think they deserve the right to compete on fair terms rather than have blockages coming in and out and have effective taxation as they go in and out of the country.
Srini, I want you to take on this issue as well, because this has clearly split the community into two camps. One that believes that this is the right thing for the government to do, and the others that believe that, look, this is inefficient. It, in fact, ensures that the system is broken. So, Srini, how do you look at this issue, and what do you believe or what would you expect the government to do?
At a macro level, I agree with what the Minister Goyal has said. I think let's understand the rationale for many of these businesses that were domiciled outside. Many of these businesses which are domiciled outside, their primary market that they were addressing is actually the Indian market. They were simply domiciled outside because of conveniences of LPs or investors or private equity funds which were investing in that. I can understand Alok's point that if there are businesses which were built in India but were addressing global customers and therefore have better appreciation in other parts of the world, fair enough. But if you take a consumer business, for example, let's take Flipkart. Primarily, it is an Indian business. Their revenues are Indian business. The market is in India. Yeah. If Flipkart had to flip backwards and come back into India and for India listing, I think they need to pay the tax because you made the mistake of originally going outside because somebody told you that's a better way to go and do business. So I don't totally disagree with what the government is saying. Having said that, I think there is another consideration that the government needs to have, because let's understand, when you flip that structure in India, foreign investors will have long-term capital gain, which will be bought by Indian mutual funds and yours and my money. And they will have to pay, they will pay lower taxation on the capital gains in India. So government will eventually be a net loser. So I think it is reasonably fair that there has to be some level of collection of taxes by the government for whatever may be the benefit that an investor may get.